what is the process of buying and selling in a nutshell?
It's a lot longer than a lot of people anticipate.
The topic of buying and selling businesses is becoming increasingly popular because of its ability to create a cash flow that is instant.
You have instant cash flow.
And on the flip side, when you're trying to build or develop a business, there are common mistakes that people make that can impede the ability to sell it later on.
Everybody finds out their business is for sale. You want to keep that very confidential. Do not name your business after you.
Today's guest is Blake Doyle. He is a business broker that assists in the buying and selling of businesses. He will break down what we need to know to make it an easier transaction from not only just buying, but also selling so that we can get the best possible outcome in the process. With the seller, what's the biggest issue that they have when they're trying to sell them? Buying a business, it's really exciting right now. Everyone wants to do it. It's people are viewing it as the easy way to make money fast. Could you run me through what is the process of buying and selling in a nutshell?
It's a lot longer than a lot of people anticipate. They think, it's like buying anything else, and it's really not. It's a much more involved process. It's a more involved process than buying a home. It's a more involved process than buying a car. There's just a lot more to it. So, for example, you're talking about selling a business. Ideally, if you can, you need to start that process about 3 years before you want to actually go to market and sell your business. You just need to make sure your business is prepared to sell. You need to make sure your books are clean. If you can, you need to try to have some type of management in place. So when you leave, there's still people there when the buyer acquires the business to help them with, yes, as the owner, you will be going through a transition period, but you're only going to be there for so long. And it's going to be more appealing to a buyer when you've got someone, let's say a right-hand person that knows all the ins and outs of your business, whatever it is, whether it's a plumbing business or a retail lighting business or a car wash, whatever, doesn't matter. They know the process. They can be the next person's right-hand man. Plus, it also makes your business a little more appealing because it could be run absentee or semi-absentee. And I think a lot of what you're getting at is a lot of people are looking at buying small businesses as investments, and they can be investments. But just like if I were to put $50,000 into crypto or a stock, Apple, something like that, there's always inherent risk, just like with any investment. So you have to make sure that you have someone that is with you to mediate those risks as much as possible. And that's where a business broker can come in and be extremely helpful.
Yeah. And so let's have a look at buying the business first, because I think that's the real popular one on the internet. With buying the business, what are some of the variables you should look at?
First and foremost, you're going to want to look at the black and white. What are the numbers saying? Because the numbers and the financials are going to tell you a lot about the business. It's going to tell you a lot about the health of the business. They're going to tell you where there are avenues where you could maybe improve the business. A lot of people, and especially I would say over the past 10 years, are looking to put in processes into business. They see processes as a way to make them more efficient, make them more profitable, and that's absolutely true, but you could have a good process to begin with. Another thing is just looking at what people are saying about that business on the internet, on social media. Do they have really good reviews? Do they have reviews that aren't so good? That's another good indicator of the business. And finally, is it something that you're going to be interested in? Is it something that you're going to be passionate about? That can make a lot of big difference in the success of the business after a purchase as well. So you need to have a lot of different factors that you look at when you're looking at a business to purchase. Either for most people, it would be a purchase as that's going to be their living. That's how they're going to make their living. For those that are investors, they want to, they're looking at it from a different perspective. A lot of times your investors in a business to buy a business, they want to see a return on their investment in 12 to 18 months. So, for instance, if you're buying a business on an SBA loan, let's say you have a let's say you have a 15% equity injection from the bank. Let's say it's $1 million business. You're putting in $150,000. Are you getting your original investment of $150,000 back within 12 to 18 months? That's an important factor for them too. You want to make sure that the business cash flows well. You don't want to be stuck somewhere where the cash flow on the business is just kind of barely covering your note for that business. And if you get into a little bit of trouble, you're in big trouble, and so is the business. So you want to make sure you have plenty of debt coverage as well.
Yeah. So 12 to 18 months is typically what the value of a business is to buy. Is that accurate?
Well, it's not necessarily the value of the business, but the business is valuated in a different way. Mm-hmm. But when a buyer's looking at it, they want to get that initial investment back as quickly as possible, usually between 12 and 18 months.
Yeah. And is that the investment of cash that they've put in?
Correct.
Or is that the total?
Not the total. It's the initial investment in cash that they put in. So like we were talking about the example of, let's say you were buying a business and it was for sale for $1 million, and the bank on an SBA loan required a $150,000 equity injection. That initial investment of $150,000, how fast are you going to get that back out of the business? How fast are you going to have your money returned? So if what they want is to try to get it back within 12 to 18 months on an investment. So they want to see that $100,000 back into their pocket from the business within 12 to 18 months.
Wow, that seems pretty fast.
It can be fairly quick, but for instance, if we were looking at a business that was priced at $1 million, let's say it was a 3 multiple on that. So it should be around $333,000 in cash flow that it's producing. If you're putting $150,000 down, you should have plenty to get that back within your first 12 months. Mm-hmm. So, you should realize that within the first 6 to 8 months, you get your initial investment back. Now you're just paying down the note.
Yeah. And so how often do the buyers of businesses look at the weaknesses of it so that they can, say your expertise is more in processing, like having a CRM and managing, and there's a business that doesn't have that installed. How often do purchasers of businesses look at that and be like, all right, if I bring in this, I can now add that company to my company and collectively now be worth much more than the sum of our parts combined?
Correct, and that's done quite a bit. So that's a synergistic buyer that has an established business and is looking for a business that they can meld into theirs that's very synergistic with what they do to increase their top line and bottom line. Mm. So that happens a lot. For instance, you might have a general contractor that's doing home remodeling, and they're looking at a plumbing business, because they can meld that right into theirs. So they take that plumbing business, they can meld it right into their general contracting business. Yeah. Now they're not subbing out the plumbing anymore. They're doing it in-house. They're making a higher profit. They're bringing in more revenue. So it works really well for them. They also, like you said, will look at things like, do they have a really good set of processes in place? And that's where a lot of people, especially nowadays, feel like that they can come into a business, they can really increase the profitability by adding really good processes to it. And that is also a very strong selling point when you're selling your business. If you have really good processes in place, it makes your business that much more appealing, because that way you can hire and bring on people, and all they have to do is follow your process, go through the steps. It makes it very easy for the next person. Yeah. So, for instance, I've got a business that's probably going to be closing here in about a month or so. They have extremely strong processes in place, and that was a major selling point to it. Was they have such detailed processes in place that everybody knows what they're doing, everybody knows how to do it, and so your employees and so on could be more independent because they know a process, they follow the process every day, they know what they're doing, and it makes everything more highly efficient as well.
And does that increase the value of a company then?
It can. Yeah, it absolutely can.
If you're not doing engaging content for your business right now, you are missing out on countless sales and you're not even aware of it. When I first moved to Florida, nobody knew who I was. I didn't know a single person, but it only took 6 months for me to become well known in the area because of the power of video content. Now, this wasn't a transactional thing like Facebook ads where you just put money into the machine and then you can see if money comes back directly. The difference with video content is it is a relationship builder. And what it's there to do is to build relationships with your consumers to give yourself an unfair advantage against your competitors. Take one of our clients, a landscaper, as an example. Within the first 8 weeks of creating video content, they noticed that their clientele started getting younger. And the reason being was they were still being searched via Google. But what our generation does is we will then search on social media platforms to find out more about you. And then what he noticed was those videos gave him an unfair advantage when they actually called, because now they had more of an emotional bond with his business over the competitors. So if you would like to find out how video content can give your business an unfair advantage over your competitors, go to skymediahouse.com or click the link in the description, set up a call, and we can have a quick discussion to see how and if it is the right fit for you. Now let's get back to the show.
Most of your buyers are going to simply look at, your black and whites, your comps.
Comps?
Comps, just like if you were going to buy a house and someone, let's say you wanted to sell your house and I was going to be your real estate agent. Well, one of the things I would do to price your house is I'd look at comps. What are houses, similar square footage, with similar features like a pool or whatever? What have they sold for? Same thing in business. So we can go look at comps and see what businesses that are very similar to yours, what they've sold for. So we can see where the multiples are.
Yeah.
So we know how to price your business right to the market, because 1 year, let's say an HVAC may be worth a 3.5 multiple, but the same HVAC 2 or 3 years later could be worth 2.5, something like that. Or, for instance, an AC company in Miami is probably going to be worth a lot more than an AC company in Duluth, Minnesota.
Yeah.
You're not having as much work. You don't have ACs go out as much. So there's differences with that too when it comes to where the business is located. There's a lot of different factors.
Run people through what a multiple is, just for if they're not familiar.
So when we price what we call a Main Street business, and normally a Main Street business is a business that is doing under $1 million in EBITDA. So EBITDA is earnings before interest, taxes, depreciation, and amortization. So under that $1 million in EBITDA, you have your Main Street business. You're looking at, most of the time, a SDE number. What SDE means is seller's discretionary earnings. Basically, it's what is the owner benefiting from the business? Well, they're benefiting a salary. They're benefiting the net income of the business, and also any personal expenses they may run through the business. You may, lease your car, and you run those payments through the business. You may have some other things that you run through the business. Any benefits that you're gaining from the business, those go into your SDE. So I take all those numbers and I put them together to get an SDE.
And that's because after you purchase, those expenses disappear.
Because for instance, like let's say, so a couple examples of an add back. Let's say you're leasing a car through the business. Well, the next owner may choose not to. So all those profits actually go back into the business. Let's say, for instance, we had a hurricane here, Ian. Let's say you had some damage to your store from that hurricane. You had to spend $30,000 to get your store back in order. Well, that's a one-time expense that's not something that's going to occur with any regularity. So I get to add that back in. Because the next buyer, they might not have to do anything. There's the chances are they won't have to do anything to repair the building after a hurricane. So you get to add those back in. And then a multiple is we take that SDE number and we put a multiple to it. Usually on a Main Street business, it's anywhere between, let's say, 1.5 and 3.5. So let's say it's a industry that's really on fire right now. For instance, here in South Florida, trades are very hot right now. If you have electrical, plumbing, HVAC, anything like that, people are really keen on getting a hold of right now. So their multiples are going up much higher.
Really?
Yes. I had a plumbing company here in Southwest Florida that I sold here this year. It got over a 3 multiple. Because plumbing companies, HVACs, like I said, are very, very attractive right now. People want to gobble them up.
Yeah. Even with the struggle of hiring?
Number one complaint of every single small business owner I talk to is labor.
Yeah.
Labor. Getting people simply to work. Getting people they hire to show up to work. Being able to pay them what they're asking for nowadays. It has been a struggle for all of them. But I think that is starting to soften. I think as a lot of people look out to where the economy is going and so on and so forth, they're not as job hopping as much as they used to. In a lot of those spaces, especially over the past couple of years, hey, so-and-so is going to pay me an extra 50 cents or $1 an hour. I need that raise or I'm going over there. Well, they would hop. Now people are a little bit more leery of doing that. They want to be more stable, possibly going into a recession. So they're not doing that as much. So I think the labor market is sorting itself out a little bit. And I think we're also starting to move away from the COVID pandemic kind of workforce that was more staying home and not out. That's really starting to go away now, and more people are coming back to that labor market. I also see that, especially in the next couple of years, labor should not be an issue, at least here in Florida. We have so many people moving to this state every single day that I really just don't see labor being an issue anymore down here.
I've heard you, when we spoke earlier, you mentioned about the importance of understanding the market you want to get into. What exactly do you mean by that?
Understanding for instance, what's your background as a buyer? What's your background? What are you good at? What do you have experience in? And then try to, if you can, look at industries that are going to be synergistic with you and what your strengths are and what you do well. For instance, I have some people that say, "Oh, I want a restaurant." Well, have you ever owned a restaurant before? No. Have you ever managed a restaurant before? No. Might want to think about a different industry, seeing that restaurants are probably one of the most difficult industries to succeed in.
Yeah.
And I've seen it time and time and time again. I've actually had clients that have sold their restaurants because they started a restaurant thinking it would be fun, thinking it would be a place for them and their buddies to hang out, and I'll make some money and it'll be a great time. And then got into it and realized this is another full-time job.
Yeah.
Even when I've got a good GM and I've got people in place, it's still a full-time job. So make sure it's something you really want to do, or it's something that you've got a passion for. Because, like I said, there's some industries that are really, really tough, and you really got to have a passion for it. So that's why I said make sure you match yourself to a good market, to a good industry that you want to be in.
So even just like the love of building a business, and because sometimes people they love the building of a business. It's not necessarily the thing that they're selling. Like, say again, plumber is an example.
Yep.
Is it possible? If so, how is it possible to build a business, like a plumbing business, when you're passionate about just building?
Yes. There are those, and those are the serial entrepreneurs. Those are the people that just love business. They love building business. They love building processes, things like that. That's just how their mind works. So a lot of times they are industry agnostic. It doesn't matter to them. They just want a business where it's doing well now, but they see a lot of opportunities where they can make the business more efficient, more profitable. And a lot of times those buyers are looking to buy a business, own it for anywhere from 3 to 5 years and flip it. So they're your house flippers of the business world.
Yeah.
They come in, they look for a business that's maybe been fairly flat or maybe struggling a little bit, and they see opportunities where they know that they can improve the processes of that business and make it more efficient, make it more profitable. So they come in, of course, buy low, put their processes in and different things that they want to do to improve that business, increase the value over 3 to 5 years, and then they go to the market and sell it. They take those profits, they invest it into the next business, and they go and look for the next one. Now, those make up a much smaller percentage of our clients, but there's those out there that's just what they do. They love being the entrepreneur. They love fixing businesses and turning them around. Or a lot of times they also love just starting them up. They start them from the ground up. They 3 to 5 years to get the business going. They put it to market to sell. They get it sold. They start out in some other different industry.
Yeah.
Take another business, start it up, 3 to 5 years, build it, sell it.
Yeah. And so is 3 to 5 years the typical time that they hold on to it?
Yeah, you have to hold on to it usually for at least 3 years, especially if you're wanting a buyer to be able to get SBA financing. SBA usually has to have at least 3 years. Sometimes we can get away with 2. but they really like to see 3 years of solid numbers so they can get a good sense of the track record on that business, especially a startup.
What about a business that you've purchased? Should you still be holding, like say you've bought a business that's 5 years old, had it for 1 year? Is that ideal, or is that sort of
It's not
advised
ideal,
against?
but you can do it because the business still has more than a 3-year track record. It's only got 1 year of track record under the new ownership, but it does have a 5-year track record. The 3 years, especially if you're someone that's going in and putting in those processes to try to build the business up, 3 years is better.
Yep.
Because then they're going off of what you have done, not what off of someone else has done. So it's better if you're wanting to get the best value for that business, but it can be done.
Yeah. And so onto the sellers now. With the seller, what's the biggest issue that they have when they're trying to sell them?
One of the bigger ones that I run into is letting go. Your small business owners have had total control of their business for 15 to 30 years, and they have a little bit of trouble letting go of that, giving that up. Some of them, it's very easy. They're like, I've worked my butt off for 30 years. I'm done. Please take it from me. It's a great business. Please take it from me. Others, well, I think you should do this, and I think you should do that, and so on. They still have that little grasp on their business. The other big issue is being prepared. A lot of times I get calls out of the blue. Hey, I'm 65 and I'm ready to sell my business now.
They don't realize it's 3 years.
They don't realize I can do that. And I can still put it out there. We can still get it sold. But it would be much better if you would have called me 2 to 3 years before you wanted to sell your business, and we could have gotten your business prepared and put it in the best shape possible to go to market with.
Yeah. Is that why I've spoken to someone else and he said that it's when you are the best time to sell a business is when you're not really ready, because like what you just mentioned, usually I guess it's like a breakup. We wait long enough to then be like, all right, I'm 100% out, to then I can just drop it. And the problem with a business is you can't just drop it.
Correct.
So
Correct.
if you're maybe thinking about it, it's probably the time to start shopping around the idea about it.
It's really the time to start planning. Just like anything else, if you plan it, it's going to go so much better than if it's from the seat of your pants.
Yeah.
So getting a plan together, getting together with someone like me, a business broker, that can help you put that plan together and help you get your business in the best shape possible to be able to go to market, that's the best. That's the best because, we're going to help you go through your financials and make sure that your books are clean. It's a big thing with buyers. They want to see clean books. They want books that are easy to read. They're not real complicated. I've had to coach some business owners into slowing down and putting through so many personal expenses through their business. It just makes everything more complex. Also making sure, for instance, if you've got that 3-year plan, trying to make sure you've got someone that is been in your business for a while that could be, if you don't have one, that could be a general manager or someone to help out after you're gone. It just adds value to your business when you've got a staff in place, and especially a managerial staff in place that's very good and can handle daily operations.
Yeah, because I see a lot of things that happen with businesses. The owners tend to make themselves integral, whether or not that's because they want to feel important or they don't trust that anyone else can do it as good as me. Does making yourself an integral part of the business ultimately hurt the value of your sale point?
It can. Because if you make yourself so integral to your business, well, then what's going to happen when you leave? That's the first question a buyer's going to ask. If you're so important to this business, then how is it going to do when you're no longer part of the business? So you really want the business to stand out more than the owner. Another thing I tell people they're going to start businesses, do not name your business after you. It makes it that much more difficult when your name is the business. Not saying that it can't be done, because I've done it, but it can take more time and it's a more difficult process when your name is the business.
Yeah. And so the an argument, or I guess defense I usually hear about selling businesses from some business owners is that people will buy the customer list. What's the difference in value from buying a business compared to a customer list if you had to pick like a ratio?
Very rarely. There are certain industries where they're looking for customer lists. Most of those industries have to do with reoccurring income because they know the bigger customer list and it's reoccurring income. For instance, like you have a pool route. Customer lists are really important in a pool route because that's reoccurring income every month, every quarter, every year, however you bill it for their pool cleaning. So the more clients you have, for them, they see the more value in your business. If you are a home remodeler, it's not that really big of a deal. They don't care about your customer list because, you did a remodel for that person 2 years ago. You might not see them for another decade. So that's not quite as important to that buyer. So there are a lot of owners that put a lot of value in their customer lists and how many customers I have and so on and so forth. Unless you're in a business that has recurring revenue, it's really not that important to the buyer. What is going to be more important to them are, like I said, your black and white numbers. What do you have in processes in your business? What are your key people? Do you have a good management staff? Things like that. Another thing that more and more business buyers are looking at is also turnover. How long are your employees tenured? Do you go through a lot of employees? And that can also be industry specific as well. For instance, if you're in a business like civil construction, your laborers come and go. They just do. That's just the nature of the beast. So that's not quite as important. But your managerial staff, how long have they been there? How long has your bookkeeper been there? How long has your field supervisors been there? How long has your superintendent been there? Those types of things. Those are more important. Your laborers, it doesn't matter. They go in and out all the time. So.
Yeah. And so with a business such as like the pool cleaning example, where they've got routes, so to speak, I guess that's what they call them. In that example again, where you got a business that has systems in place and everything, it's basically like almost a plug and play. The staff, like there's systems for basically every part of this business and the recurring revenue, versus a business that doesn't have those systems in place, or they're kind of, loosey-goosey, but they have a great customer list. What would be the difference in value between those two if you had to pick like a ratio? Like, would it be 50% more as valuable as the one with all the systems, or is it?
I would say, for instance, like if we were comparing those two businesses that you just talked about, the one with the system preference, the one that has the good systems in place, efficient routes, things like that. It depends on what you're looking for. So, for instance, if I was comparing those two businesses, if I wanted a business where maybe the numbers weren't as good, they didn't have as good of processes in place, so on and so forth, but I could get it at a good price and I see opportunity where I can add in those things to that business and increase it, maybe that's what I'm looking for. Because let's say I'm 40 years old, I plan on working for another 15, 20 years. Maybe I want to find a business where I can really grow it and improve it. Where maybe I am 55 years old, I might want to go with the business that's got the better processes in place and things. Maybe the income and everything is more steady. It's not going up or it's not going out. It's just more of a steady one because I'm looking for more of that steady income. I want a business that's already got all of that in place. I don't have to do a whole lot of work. It's more plug and play like you talked about. And it's just an income stream for me and it's more of an investment. Where the other one, maybe I'm younger, I've got more energy, I want to put a lot more into it, I want to get my hands more dirty in the business. That may be a better route for me is to find one where I can put those things in place. If it's already got all those things in place, okay, well, what am I going to bring to the business to improve it, to grow it? It might be more difficult than one where, okay, I can improve all these processes, gain more market share, gain more clients, improve the routes, improve the route efficiencies, and then I can make the business a better business by the time I'm ready to sell it maybe 10 or 15 years down the line.
Yeah, and so from the seller's point of view, it's better for the seller to have all those systems in place.
You're going to get
because
the most value out of your business, correct? If you want to
Yeah.
maximize your selling price, maximize the value of your business, yes, having those systems in place, keeping clean books, having a good managerial staff, all important things.
Yeah. And if you have those systems in place, does that mean that you've got a higher quality of buyer as well? Because they're more like, I'd imagine, and you can correct me on this, people that are looking for a business where they don't have to think about it usually are just looking for a way to park their money for the most part, like real estate. You buy a house because you just have to hire a manager for the house or a realtor, and then you can sit back and just worry like that. The realtor goes, hey, there's this expense. You're like, all right, cool, whatever. Are those the type of people that are looking for businesses that are fully systematized?
Yes. So your investor is going to want most likely one that's more fully systematized. So for instance, your private equity, they're just investing in the business. They're not taking someone from their office and then putting them into the business and run the daily operations. They're more looking for a business that they can invest in, buy, maybe inject some cash into it to get the growth going, put in some processes, things like that. But they're not actually putting anybody necessarily into the business. They would like one where they could take maybe the owner's right-hand person, promote them to being over everything, give them a little salary bump, and then they're running it for them, and they're helping them out by making it more efficient, trying to maybe negotiate better deals when it comes to a product that they buy or something like that. Just any efficiencies that they can improve on the business, that's where they want to come in. They don't want to really necessarily be in the trenches on an everyday basis grinding in the business.
Yeah.
So it depends on what type of buyer you're looking at. So yes, absolutely. Those make it more attractive to them. If you don't have management in place, things like that, it's not that attractive to them because they're not looking to run the deals. They just want to invest in that, grow the business, and then most likely 3 to 5 years down the line, they're either going to meld it into another one or they're going to sell it. So they're just looking at it, like you said, from a purely investment standpoint. If I invest $1 million into this, can I get $1.5 million or $2 million in 2, 3, 4, 5 years? Can I get that return on my investment? Because that's what they're ultimately doing. They're being given money from outside investors to get a return on it. Just like you would give your money to a financial advisor to put in the stock market for you. They're giving money to these people to invest in businesses to see a good return on their money. They're looking for 10, 12, 15, 19% on those because it's more risky,
Got you. So 20% is the money you get back on an investment in a business? That's what they look for?
It can be. I mean, it can be very high. For instance, it depends on, did you buy the business? Did you start it from the ground up? Where did you come from? I've got some people that they started a business from the ground up. 4 years later, it's worth about $1.8 million. And their initial investment was, even their investment over the lifetime of the business was maybe $400,000. They probably started it with about 50. So, and as they grew, they, bought more trucks, more vans, hired more people, things like that. But they're seeing a huge return on their investment. But yeah, I would think most of people that are putting their money into private equity groups to invest in businesses and things like that, they're looking for a solid return. They're probably looking for something over 10% because they can go to the real estate market or a lot of other places, especially right now, and get a really good return on investment. You can sit it in a money market and get over 4%. So, if they're going to take more risk, they want to see a better return on that risk. Yeah.
And so with multiples again, let's go back to that. With multiples, what is the best multiple? I hear it's technology.
Yes.
I've heard numbers like 20 to 50 multiple. Is that myth, or is that like some of them, such as like Tesla, might have that because of the forecasting?
Yeah, it's not myth. Yes, your tech, software, those type of companies, huge multiples. And they can get crazy like that. Now, we're not going to see anything like that in our mainstream market, but you start getting into some
like Facebook, Apple, stuff like that.
Yeah, you start getting into some of those. Your startup techs, for instance. I'm sure a lot of people have been hearing about NVIDIA, and the AI.
Oh, okay. No AI.
You're going to see huge multiples in that stuff because they're seeing all kinds of applications for that and how it can be used and so on and so forth. Now, you've got the counter side to that with people saying, whoa, slow down a little bit. How advanced do we want this AI to get and so on and so forth. But, I mean, you can look at multiples in there that are crazy numbers like you're talking about. But with your Main Street, even with your software companies, your small software startups, your IT businesses, things like that, 5 to 6, I think, is where a lot of them are at. Even with some of your specialized services, for example, like if you had a business where you were giving expert advice or you were an expert witness or something like that. Business services are very highly specialized. Those can see high multiples too, up to 6. But most of your Main Street businesses, you're going to be, like I said, between that 1.5, 3.5 is what you can expect.
Yeah. And so because most of the time, what a lot of people are talking now is like, buying boring businesses, as Cody Sanchez puts it. That's where the money really is because it's tried and true. So something like a plumber, something like I don't know about bricklayers, they might be on the way out, I don't know, but stuff like that
Correct.
is something where it's safe-ish money. Because we're based in Florida, you've mentioned already that the trades are something that a lot of people are looking into. For someone, let's look at this from both sides of the coin. So on a buyer's point of view, what are the risks and rewards for that? And then also the sellers, let's look at the risk and reward, meaning like, what's the risk of buying? Is it maybe too late? Is it on the way out? Or is it also like the reward that it's still on the up and up for the next couple of years?
So you're talking about the risk reward right now in our current times.
Like in terms of the market, because you mentioned the multiples are going higher. Is there going to be a change in multiples maybe in the next 5-10 years that a buyer should be aware of?
Oh, there's going to be changes in multiples every year. A big thing that's been affecting the multiples and not affecting it in the way that I had anticipated were the interest rates. Most of your small business is going to be bought with an SBA loan. That loan is over 10% in interest now.
Oh,
I thought
really?
when we would hit 10%, it would really slow that market down. It hasn't seemed to yet. I know they're talking the last Fed meeting, they did not raise or lower any points. They're anticipating possibly 2 more quarter-point raises. I hope that's where it tops out.
And you haven't seen a slowing down.
Because it makes it that much more difficult. And it also, one thing that sellers don't understand is as that interest rate goes up, it can affect the price of your business. It can bring your price of your business down. Because of the simple fact of as that interest rate goes up, that person's paying more per month, per year on that loan. That takes cash flow out of your business. So that can lower the value of your business. For example, like we were talking about debt service coverage. If because of interest rates and the amount of your monthly, yearly SBA payment is going up, you have less cash flow to put towards that. So as the seller, your business is worth a little less because it's still got to be able to cash flow to pay for what you're asking for. I do run into that sometimes. I've got to talk to sellers about their asking price. I go in and I want $4 million for my business. Well, you're only cash flowing $250,000, and that's not really going to support that note.
Yeah.
So we can go to market, we can ask for $4,000, but we may get nothing but crickets for several months because when they look at your numbers, they're going to say, well, I can't afford to pay the note on $4,000, only having $250,000 in cash flow. So I have to have some of those conversations with sellers, which are not easy, and they can sometimes get upset. But it's the reality of the situation. And that's another thing that's very different between buyers and sellers. Sellers are very emotional about the sale. This is something that they've worked on, they've built for years and years and years, so they have a very strong emotional attachment to it. A buyer doesn't have a really emotional attachment to it. They're simply looking at it from an objective perspective, and this is black and white. It's either yes or no. So it's very simple for them.
A buyer's still, I know because I'm guilty of this myself, but sometimes a buyer can have their own blinders on about why it would work. And then there are some buyers that can fall in love with businesses. Yeah. And that can kind of be difficult. And that's why, especially if you're a buyer as well,
You really want to have a business broker with you, especially since it's not going to cost you anything. I don't charge anything to help a buyer find a business to buy, because the way I'm paid is on the commission, because I'm splitting it with the selling agent who's selling the business. So the fact that you don't have to pay for one of us and you get free advice and free help, please take advantage of that if you're someone who's looking to buy a small business.
That's
Contact a business broker, get in touch with them. They can help you with that process.
So it's a similar setup to real estate, really. So you've got people, you got a realtor, or in this case, broker, helping the seller and the buyer, but it's the seller that pays the. So what if there was a situation where the seller doesn't have a broker, but the buyer has a broker? What, in that case, how is the fee distributed?
I have run into that before, because there are owners that try to sell their business on their own. They don't get a broker. They think they can do it on their own, and they try to sell it on their own.
They also want to save the money themselves. Like, why would I pay someone else?
They're trying to save the money, and it very, 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 very rarely works out for them.
Because of emotion, I'm imagining.
Emotion, they don't know how to manage the process. A lot of times, one of the biggest things that can happen, they expose their business.
Expose their business?
Everybody finds out their business is for sale. That's another thing that's very important with the business brokering world, is when I take a business to market to sell, I make sure that you know what the business does and what some of the high level numbers look like, but you don't know where the business is. You don't know the name of the business, anything like that. Because if it gets out that the business is for sale, it can't hurt that business. Customers start saying, oh, they're selling that business. Well, maybe I ought to look for a different plumber. Maybe I ought to look for a different HVAC repair person, something like that. Because I don't know what so you want to keep that very, very confidential. Especially also when it comes to employees. It can scare employees and spook employees. Oh, they're selling the business. Am I going to have a job? Oh, maybe I need to start looking for another job, and maybe I need to, get out of here before before something happens. It can just spook a lot of people. So confidentiality is a very big thing when it comes to business brokering as well. It's not like with a home or something else where you want everybody you could possibly find to know that that house is for sale.
Yeah.
Mine is very different. I don't want anybody to know that this is the business that's for sale. I want you to know that there is a business for sale, and it is an HVAC, and it's located in South Florida, and it's doing $1 million in revenue a year, and it has a bottom line of $300,000. But if you want to know any more than that, you have to sign an NDA. So we keep everyone under, all the buyers that inquire and want to see anything beyond the basics on a business that we sell, you have to sign an NDA. So that makes sure that everyone's protected, no one's going to find out about this, and that we keep it quiet.
Initially, you would think like the more people that know would drive up the demand, and then that will drive up the price. However, the problem, like you mentioned, is every pro has its con, and or consequence, which is in this case that because I know with the gym that I used to work at, we were hounding them to get equipment, get all these things, and they were always like, it's coming. And then we found out probably 6 to 12 months later that, we're selling the business and it's turning over in the next 6 weeks. And then that was why they weren't spending any money, because they wanted to, at least the last year, they wanted to prove that they were doing pretty well, EBITDA. But it's interesting too, because by the time they were like, hey, we're going to change, we're all still like, this is going to be it's 6 weeks. It was so quick that nothing. Like no one left.
Correct.
Because it was too quick, and it's just like, fuck it, we're here now.
Yep. And that's a good transition.
Yeah.
When it's such a smooth transition that the employees don't even really realize that someone else is running the business or owning the business, that's the best.
Yeah.
Is, nothing changed. I'm still coming to work. I'm still coming to work at the same time. I'm still doing the same job, still getting the same pay. Okay, I'm comfortable now. Everything's good now. Another way that we always like to try to do transitions is we try to make it a really good and positive thing for the employees. For example, there's going to be more opportunities for everyone. There's going to be opportunities to move up. There's going to be opportunities to have more responsibility, things like that. We want to make it a positive for everyone involved.
Yeah.
So, it's a positive for the owner. Let's say they're 65 years old. They're getting to transition out and go on to retirement and do the things they want to do. A buyer's coming in with a new business, new energy, lots of different things. And the employees see opportunity in this transition because we want to grow this business. We want to expand this business. So when they hear growth, expansion, they hear promotions, possibility for more money, possibility to have more responsibility, so on and so forth. So we want to make it a really positive thing for everybody coming into it.
So really, like, the idea of having a broker is, because I didn't even think about that. I guess because I suppose everything you need someone who's a neutral mindset, also experienced. Like, my rule of thumb with everything is always, why would I spend all the time to learn a skill versus paying someone who's better than me and I can learn alongside them? And then, I'm imagining just having a broker, you'd be like, oh, okay, this is where I would have fucked up in this situation.
Correct. And that's why I said it's whether you're on the buy side or the seller side. If you're on the sell side, it's going to be worth you get a broker that you've interviewed, they know what they're doing, you get along with them, you think you're going to have a really good relationship. It's going to be worth every penny to you in the end. And if you're a buyer, why wouldn't you? It doesn't cost you a dime, and you get good advice, and you get someone by your side that, hey, maybe it's your very first time buying a business too. You need someone to say, hey, no, you don't want to look at that one for this and this and this reason.
Yeah.
Hey, maybe take a look at this one because I see opportunities here for you. So on and so forth. You have someone coaching you and helping you through that process. Another big thing that you need help with is the SBA loan process. That's a pretty involved process. You've got SBA rules, and then you've got bank rules on top of the SBA rules. There's a lot of things to muddle through and get through. So it's good to have someone that understands that process, has been through it several times, and knows how to get you through that process. Also, it's good to have that business broker because if there's someone like me, I have relationships with lots of different banks. So depending upon what business you're looking at, I know which bank to go to and which banks to avoid because it's just going to be a waste of our time. Your SBA loan process can take anywhere from, at the quickest, 45 days, at the longest, maybe 120 days. So that's a long time of getting through that process. You don't want to waste any time, You want to make sure that you're being efficient as possible when it comes to that too. And so having that business broker there with you that you don't really have anything to do with paying them, why wouldn't you at that point? Get that advice, get that help, get that support in going through that process. Because like I said, a seller, you may go through it one time in your life unless you're that serial entrepreneur. And if you're a buyer, you may only buy one business in your lifetime. It could happen. So you want to make sure that you have someone there to guide you through that.
Yeah. What's a risky business that banks are like, ugh? Like, what, a gun range? Like in Florida, gun range? Would a bank be like, hell no? Or they like...
It depends on the bank. Some might be hell yes, and others might be, I don't want to touch it with a 10-foot pole. And it's, for instance, there's banks that they won't touch construction with a 10-foot pole. It's not our lane. We don't play in that arena. And then I know the other banks that say, bring it on. We love construction. We love trades. We love services, things like that.
So it all comes down to familiarity as well with them.
Some banks also look for, okay, how much does the company have in assets? They want to see a lot of good assets. Other banks, we don't care about assets. We're all about cash flow. How much cash flow is this business spinning off? So like I said, that's where you also want to have a broker because depending on what your business you're looking at, I know which bank to send it to. Hey, this business doesn't have a ton of assets, but it's got really good cash flow and it's in the construction industry. I'm going to send it to this bank because they're going to love it. That, where if I sent it to Southwestern State Bank, Edison, whatever, here in Florida, they may say, "Oh, we don't want anything to do with that," and it'd just be a waste of our time.
Yeah.
So
there's with a broker will help you with not only the negotiation but also just advice of what's a good idea and what's not. Now, with an example like a serial entrepreneur, what do you look for in someone like with that mindset? What variables do you look for in terms of like, hey, maybe this is a great industry for you to get into? Like, do you have insight into that like person?
A lot of those serial entrepreneurs already know what they want to get into. So they know they've usually done their own their own research and they know what industry they want to target, whether it be because that industry is gaining popularity or maybe that industry is underserved in an area and they see an opportunity to where they can really take advantage of that. And the SBA is also another great tool for people like that that are looking to buy a business. SBA can give you tons of information when it comes to things like that. So you can maybe find a niche business or something that either you want to start from the ground up or you want to buy into that, like I said, is underserved or doesn't have very good companies that are serving that industry, and you feel like you could stand out from amongst those.
Yeah.
Different things like that. And SBA can give you tons and tons of information with that. They're a great resource.
Interesting. And so when you buy into a business, is your cash flow, the benefit of that, I guess the cash flow is instant.
You have instant cash flow. So that's the big benefit is you've already got something in place. You already have employees in place. You have cash flow on day one. So you're not starting from the ground up. You're not going out and trying to find employees. You're not going out and trying to find clients to build up your cash flow to start taking care of the business, taking care of yourself. So it is easier to enter buying versus starting up.
Yeah.
But your difference too is you could have a lot more blue sky starting up versus buying into.
Yeah.
You could be buying into a business that's fairly flat. Now, some people that, like I said before, that's exactly what they want. They want something that's steady Eddie. I know it's going to make this amount of cash flow every year like clockwork, and that's what I'm looking for. So it just depends on that too. Every buyer, every seller are individuals. And that's one of the things I love about what I do is everything's different. The situations are always different. The people are always different. The issues are always different. And that's another thing too. There's issues in every single deal. And you got to learn to either go over them, under them, around them, through them, whatever you need to do. But and that's why I like it. It's always a challenge.
Yeah. Say you're looking for a business in the $100,000 range. From a buyer's point of view, what do you need to have in place? Obviously, if I'm relating it to real estate, it's like, you need 20% down or blah, blah, blah. What are the
$100,000, you're
variables?
most likely going to need $100,000.
So a bank, an SBA is not going to touch that?
SBA, most of their loans are going to be for $350,000 or more. There are SBA Express loans that are up to $350,000. They can be a pain. Also, if you're someone who's looking at a $100,000 business, I would try to talk you out of looking at a $100,000 business.
How come?
$100,000 business usually is not going to be throwing off much cash. Most of the time, your business that's $100,000 is probably going to be an asset sale. And what I mean by that is the business is either no longer running, it's not running, the business is no longer running, it's not running well, and they're just basically selling it for the value of the assets. So value of the equipment, their trucks, their whatever that they have that has value in that business. It's like Grant Cardone, which I listen to, I watch a lot, says it's always easier to buy 32 units than it is one unit. It's easier to manage 32 units than it is one unit. So to me, if you're looking at a business, it's easier to buy one that's more expensive than it is one that's cheap. It's easier when it comes to the financing. It's going to be easier because you're going to have better cash flow once you acquire that business. It's probably going to be a more established business. It's going to have better employees. It's just going to be a better investment all the way around. If you're looking, frankly, to me, if you're looking at buying something that's around $100,000, you're probably better well served than just starting it up from the ground up and just using that money as your Kickstarter money to get it going.
Let's look at the 350 then. So a $350,000, $400,000 business, typically what would be the cash flow that you're looking for? And with an SBA loan, what's the initial down payment required?
So let's say we're looking at a $400,000 business, and let's say it's throwing off $120,000 in cash flow a year. So your SBA loan, let's say, is for $400,000. Let's say it's for $450,000. Let's say you want, or $440,000. Let's say you want $40,000 in working capital, plus you got to pay for the business. So the $400,000, so you got $440,000. Typical range right now with SBA is 10 to 15% equity injection. So you would have to have at least $44,000 to, let's say, $60,000 to put down on that business. So that equation's starting to work out. Let's say you're putting down $60,000. So looking at your 120, you probably have a payment, I don't know, probably around 5-6 grand, something like that a month. So you're going to be able to cash flow. You're still going to be able to take care of yourself a little bit. I would also anticipate a business like that is is going to be on the smaller side. So that would also be someone that I want to take it from here, and now I want to insert all my processes. I want to insert a different marketing plan, get more clients going, and try to grow that business. And usually try to grow it as quickly as you can safely do it in the first 2 years.
Make sure you're
that's another
delivering.
mistake that some new business owners can do too, is they try to grow the business too quickly, and they grow so quickly they can't keep up with it, and it just ends up hurting them in the end.
Yeah, because reputation's the biggest thing.
Correct. Reputation, especially where we live, reputation is enormous. As many as people as we see every day in Naples, it's a very small town.
Yeah.
So people talk amongst themselves a lot. So reputation is a huge thing in this town, and how you take care of people is a huge thing in this town. You have a lot of well-to-do people, and they want things done a certain way, and they want them done in a certain time frame. And if you could meet that, they usually don't care about what they write you the check for.
Yeah.
So taking care of your customers as well as you possibly can is, to me, the golden rule in Southwest Florida.
Yeah, that's the biggest thing is, everyone likes to sell, but there's that saying of the best way to kill a shitty product is great marketing. Because everyone's going to buy it, they're going to realize it's crap.
Yep.
And no one's going to buy it again.
And they're going to tell everybody about it, and you're never going to sell another one again.
Yeah. And so do you ever give a little bit of advice beyond the sale, or is it more like the relationships, I help brokered, we're done?
No, I keep up with my clients both from the buy side and the sell side afterwards, see how they're doing. I have clients that have bought that come back to me and say they're ready to buy another business. So I've been in sales for what I call sales for a long time, and I was never someone who was I want to get this sale now. I was more I want to develop a relationship with you because I don't want one sale. I want us to have an ongoing relationship for years and years and years where you come back to me again and again and again. For instance, I've been doing this since 2018. I have sold a company to someone. They came back to me and had me sell the company that they bought, sold it to the next person, and then 2 years later, they came back to me to sell that business again. So just in two relationships, 2 and 3 sales multiple times, and businesses get flipped like that too.
Yeah.
So to me, it's always very good to have that relationship because I want people to keep coming back to me saying, hey, I had a good experience. He really helped me out with this. Hey, we're thinking about buying something else to add into this, or hey, I've bought this from him. I built it up over 3 to 5 years. Now I think it's worth quite a bit more. I'm ready to sell it. I want to go back to him to get it sold. So it's great referrals for me. Yeah.
Do you ever personally, do you look at buying businesses yourself?
I have. In fact, my brother and I were looking at possibly purchasing a business here about 1.5 years, 2 years ago. Now some things in our personal lives changed that we've put that on the side burner, but absolutely. And I think it's given me a lot of good insight as to what to look for and what do I want and what is going to fit into what I want lifestyle-wise out of the business too. I'm a full-time business broker. I wouldn't want something that I have to work 45, 50 hours a week in. I'm already putting that into my business brokering. So maybe something that I can put 10 hours a week into, 15 hours a week, and get, for instance, like when me and my brother were going into it, he would do majority of it and I would help out with it.
Yeah.
So absolutely. They can be great investments. They can be huge headaches, or they can be great investments. It just depends on the person who's buying it. So
yeah, no, that's cool. And I think that's everything. You've given me a lot of things to think about now. I mean, this is something that I would love to do, and we spoke about it earlier. It's something that fascinates me. I don't want to get too caught in the hype of the online stuff because it's very exciting. But definitely it feels like one thing I've learned from this already is like the patience. And you hear about patience all the time, but the timeline for me always helps mentally.
Yep.
So for example, like, all right, have like a 3 to 5 year goal. People talk about that. But I think when you're in it, like, I mean, this business is technically only 18 months old and doing great. But I'm already like, all right, what's the next thing? Not in terms of like getting rid of this. I love it. I want to keep it. But I think doubling down on this for another 12 months before figuring out how to kind of integrate other things into it.
Correct.
Which has given me a great thing, because I know when things start going great, it's like, all right, I've got to add more versus, all right, how about I go deeper? And yeah, I think that's going to be the biggest takeaway for me, because we're going to definitely keep in touch, because as I said, people call me a serial entrepreneur. I hate the word because I think so many people call themselves entrepreneurs. Like, most of them entrepreneurs.
Yeah, that can get thrown around a lot. But yeah, and like you were talking about timelines. If you're going to sell a business, plan on it taking anywhere from 6 to 12 months. It's not it's not Walmart. You're not in and out.
6 to 12 months. That's not too bad.
6 to 12 months is the average.
Yeah.
There have been, I've taken as long as 18 months. I've done it as short as 3.
Yeah. I can't see myself selling this business, but it's more like figuring out how to build it and then integrate into other things.
Correct.
One thing with creativity, it's hard to duplicate.
Extremely difficult.
Yeah.
Extremely difficult.
That's where my brain is, Austin's brain is, and it's like just growing on that it's like more, which is why we're asking the questions of bringing in strengths into a business. Like this area, for example, marketing is not the strongest like area for a lot of businesses here. So it's like trying to figure out different ways to mesh that together.
Correct.
You know?
And I can see that because
I don't want to make our business transactional with every business we work with. I'm like, I want to look for a business where it's like, all right, we're going to forego this transactional experience for 12 to 24 months. How can I become part of this business? And we're the marketing division and I'm part owner. That's like the vision for a couple of years from now.
Yeah. And there's a lot of different ways to do that. And there's a lot of people out there looking to do that. They're looking to partner up with different individuals that they bring their strengths into it where they don't have that strength. And like you said, make the overall company much better by bringing in those types of people.
Yeah.
And I think you're very true on the marketing part.
All right, guys, let's talk about the jeans effect. So I'm sure you guys have gone shopping, tried on a pair of jeans, really liked them, but then decided I just want to shop around first, try on some other pairs to see if there's not something better out there. But what happens? We go back, we buy the first pair regardless. The reason this happens is because over a long enough timeline, we emotionally build a rapport with whatever we tried on first. This also happens with your business. So if you have video content on your social media platforms and website, those customers or potential customers can build a relationship with you, the business owner, the business, the staff on their own time. And what happens is when they go and call your competitors, jeans number 2, they're going to be emotionally comparing you to them. And what happens is they're not going to like the faceless competitor who's trying to sell them something. They're going to emotionally build a relationship with you because you've been giving them value for free. And what we've noticed with our clients is from doing video content, speeds up the sales process as a result, because these people call them back and just go, you know what? I like what I saw. I really like what you're about. How can we get this ball rolling? So if you want to make sure that your business is the first pair of jeans, go to skymediahouse.com and set up an appointment to have a chat with me so we can see how to make video content that is going to build a relationship, that is going to speed up the sales process with your customers. That's skymediahouse.com. And if you don't want to have to remember, the link is in the description. Now let's get back to the show.
It can be very difficult to get people's attention in this town.
I think that's everywhere, though.
I think it is when it comes to the social media, because we're so bombarded with everything. But here, we don't have quite. Most of our population are 65 and older.
Yeah, but
they're not on their phones all the time, so it's hard to get their attention because they don't have that in their face all the time, and they're bombarded with people trying to sell them things so much that they almost end up putting blinders up to a lot of things. So it's hard to get their attention sometimes.
It's true, but what we've noticed with this area with our clients is all of them are saying that they're noticing their clientele is getting younger once they take us on. Because our generation, you know, my wife won't go to a restaurant until she Instagrams it.
Until she sees what their plates look like.
Yeah. And so what we're noticing is like one of our landscapers, he's like, yeah, we've had a lot more younger people hit us up now because they're still Google. Like people think marketing online is like, oh, I put it out there and it's a sale. It's like we put videos out and it's a lead gen. Like, no. It's a relationship builder.
Yeah.
And so what they're finding is they still have to have their Google going. They still have to do all their other stuff, that they're already doing. You add the video component and the social media component to it. But now what happens is people are Googling them and then researching on social media. And then now it's like, I've got a choice between this landscaper, maintenance, home maintenance, who has a face, I know who this person is, and this business is, or the other one that just has a nice website. And you put the unfair advantage in their court because now it's like I have this emotional build-up. Even if it's small, it's still bigger than the website. And they like, the people come in and they're happier to spend a little bit more because they're like, I feel like I know you and I trust you. Versus just someone who, my only experience with this other company, while they might be great, is a website and a sales guy. That's my only experience. Versus here's someone who's just giving me value every second day. So that's what we've noticed in this area.
Yeah.
It makes a huge unfair advantage. They're like,
I can see that. I can see that.
But the tricky thing for us is like the owner has to see that. Otherwise, they just see money going out. They're like, it's not working. So that's what we've noticed in this area is there's still a huge opportunity with that.
So you're saying the visuals are really making the biggest impact in the relationship. It's
the relationship. So I think I spoke about it earlier was the jeans effect. So, when you look at a pair of jeans, you try them on, you're like, oh, I really like them, but I'm going to have a look first. But what happens is you go to the next shop and you compare mentally to the first pair of jeans. And the thing that happens psychologically is, I'm not sure the exact bias, but I think it's like something to do with duration. The longer you think about something, the more unrealistic it becomes in your brain. And what happens is when you look at that first pair of jeans, the next pair might be better, but you've had this emotional time mentally for the last 10 minutes versus this 1 minute. This has to be 20 times better than that one. And then you go to the second one. You've already forgotten this one because you're comparing it to the first one. And what happens with the content is if I've watched 2, 3, 4, 5 minute videos, because again, you're getting the scroll, and it's just a couple, and you're like, all right, cool, interesting. Now I've got that emotional connection, even though it's small, but then it gets magnified larger when I speak to the next person who's on the phone. It's a faceless person. And I'm now comparing a faceless person who's talking about sales and what's great about their product compared to someone else who now I'm comparing it to that first pair of jeans. That all you're doing is the more they shop around, this person has to be 20 times better than you in order for them to overcome that multiplier effect. And so that's what we're noticing with all our clients here.
That makes a lot of sense.
Yeah.
That makes a lot of sense.
Plus videos are fun.
They are.
You shoot the shit. I mean, I bag out my clients half the time, and because I get it. Like they're like I mean, we're filming with Becca later, and Becca will like swear and stuff, and he's like, "This is shit. Fuck this," and I'm like, "Yeah, we're getting there." And he's like, then at the end, he's like, "Cool." So no, that's the thing we're noticing here, and it's like I'm trying to figure out the right sort of thing for us in the next 2-3 years, because I think content maybe 5 to 10 years is going to be so all over the place that it might not be like, who knows with AI and all that and being able to create content faster. I think especially in this area, there's like another couple of years where it's red hot.
Yeah.
So yeah, no, thanks, dude.
Absolutely. This was awesome.
I got so many, like I said, we're going to keep in touch.
Love to.
Yeah. And
anytime you want to sit down and talk, I've really enjoyed this. It's been a lot of fun.
Me too. So if people want to reach out to you, we'll put in the description as well, but where can they reach out to you?
You can go to our website, which is sunbeltofflorida.com. You could also call me directly if you have any questions or want to speak to me, and that number is 913-226-7735. And I'd be more than happy to answer any questions or help you in any way I can.
Beautiful. Thank you very much.
Thank you.
See you guys.
See ya.